Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for Monday. And we're at the 29th of June, 2020 as your evening wrap-up. So the markets have been closed for a while now. I've sent out my SPDR ETF video about an hour and a half, 2 hours ago, and we can see that it was a green day. We had a nice bounce today. Now, the COVID news over the weekend apparently didn't scare the traders off, even though we are seeing a surge in so many states. I think it's 31 states are now seeing a surge in COVID-19. You wouldn't know it from the back of the market. You wouldn't know it from the back of the market that traders are worried that Joe Biden, and I'm talking the marketplace, I'm not talking me, you, but traders are worried that there's going to be a change in the White House. Maybe there's glee for that. I don't know. Not playing politics. I'm telling you there's a change. You got to be careful because the polls are so one-sided right now in favor of Mr. Biden, who has been brilliant in staying out of the limelight and letting the president basically be hurting himself more than anything else. That'll change in time as he has to come out and talk, pick a candidate to run with him, and we'll take it from there. But you can see that the QQQ, the SPY, the DIA, all strong performance days to match what the futures did. We can see gold was even alive today, and in the futures market, gold is up again tonight. Now, as you and I step back to XLK, we can see the 102.94 area right over me right here. That was your first peak, and this market has had trouble with that as it's revisited that. Trouble is not bearish, it's just having trouble with it. This is not a bear market, and I don't think you're going to see the techs go into a bear stage. They could, but I don't think they will because they drop too much. That's what traders want to own. And when you take a look at how much money is on the sidelines, and I showed that to my written subscribers, I think it was this morning, it seems so long ago. There's a ton of money waiting to come into these markets. Why? There's no interest rate return. Pretty simple. When we look at the tech sector, you're not trending. You have stepped out of a trend. You have a higher high, 105.83, that's higher than that high. You have a low here that's under that low. So you have a broadening out range, just going out like that on you. Where's the market in terms of the 18-day average of closes, which I call the line in the sand? Why? When the market is over it, I have an immediate upside bias. And what that means is if I'm getting buy signals out of my other indicators, because the bias is up, they flash green. Do you understand? When the market is under it, if I had a buy signal, the market doesn't flash anything. They're fighting each other. Well, right now, I don't have any signal. Why? While the bias is up since you settled over the 18-day average, the swing line has a higher high, lower low. That is not a trend. The resistance in the market, the upper Bollinger Band. So tomorrow, if you had a pop in the market, I would be looking for 105.44 to be very stiff resistance if it got up there. Could the market turn itself more bullish there? No. It doesn't have the pattern and cannot get it on this chart of a pattern of higher lows, higher highs. You can get there, but I'd view it as resistance. Momentum has been drifting to the downside as the market's been correcting an overbought condition. When we look at over here, this was the Bollinger Bands with it, and here you are with the slow stochastic. You know, one of the things I got to do is I got to take this off there. It confuses me each time I do it. I just spotted what it is. I like to show the slow stochastic without with the Bollinger Band off, and then the slow stochastic with everything. And that's how that should be. I'll have that fixed tomorrow. In the SMH, we've got lower highs, lower lows. That is bearish. So the resistance, 150.18. I would not be surprised if the pros try to sell into that. I think they'd be wrong if you get over 150.83 because you would break the pattern of lower highs, lower lows, underneath the 18-day average with that acting as resistance and momentum still pointing down. So you'd break one of those key patterns. In XLI, the pattern has been lower highs, lower lows. I don't think you disagree with that. But we can also see this 100-day average has been coming into play a lot, and we have a market that is what? Oversold. Both numbers are not going sideways under 20 for several days. That means oversold. I think the smart money's going sideline. They're probably saying to themselves, you know, Jobs report coming out on Thursday? I don't know. What's going to happen? Will we see increased jobs? Probably. How's the market going to react to that? Hard to tell. Why do I say probably? Because more people have gone back to work. Restaurants did open. Now they can close down bars in certain areas, but things are opening. It's a shame AMC just declared today that they're pushing back their opening date, but whatever they got to do, they got to do. They'll figure that out for themselves. I owned a movie theater in my past life, so I know I've had a lot of crazy investments, and that is a crazy one. I like the candy. Lower highs, lower lows, and you can see what the market is doing there. In XLE, the energy sector spider, lower highs, lower lows. Now this one, do we have an embedded reading? Both numbers are under 11. Both were under 11 yesterday, the day before, which was Thursday, and even the day before. So I am looking for the pros to take a shot, maybe on the short side against this 38.62, but I don't think they'll get out of their shorts until the red line gets back over the 20 level. Get over that, and I think you've scared them on a closing basis. QQQ, well, battleground. 18-day average of closes. How often do you hear me say that? Line in the sand. You've got all kinds of divergences going here. You've got no trend in the swing line. You got the bias up since you settled over the 18-day average, momentum pointing down. In plain English, the chart's a mess right now. EFA, the emerging markets, still in the bear play with lower highs, lower lows. However, it takes very little. At 61.30, you negate the downtrend. That's not very far from here, so I wouldn't be surprised if the pros do nothing here and they wait the week out. That's just what I'm seeing on the chart action. GLD I still like. You have an embedded reading, number one. The bias up, number two. The pattern, higher lows, higher highs. Initial target could be the upper Bollinger Band. On the close, it was 168.03. It's probably a bit higher than that when we reopen. I don't like the gold miners like I like gold. If they're overbought. The embedded reading's the strongest technical indicator I have. It rules the hierarchy of them. Yes, the trend is up and the bias is up and resistance is 35.92. But when you're overbought, one of the things I tell traders, why do you buy? You don't do anything. TLT, are we going to get the embedded reading or do we have it? So let's take a look here. Both numbers are over. If you can see 80, yesterday, come on, help me out here. Both numbers the day before on Friday, over 80, and the day before. The day before that, they weren't. So you have your third day today. You're too close, in my opinion, to want to buy it against the upper Bollinger Band, but on pullbacks, until that red line closes under 80, I think the pros will use some other numbers, maybe pivot points, other areas like that, to see if the market gives them a drop, should they be nibbling into it. So in other words, I think the traders are looking to be buyers until that momentum's gone. You're too oversold in the euro to want to go short down here. That doesn't mean the market can't go lower, but it also shows you where the market's failing against. Today you went to 106.40. What's the 18-day average of closes? 106.39. When you're down and you rally, that's resistance. When you're up and you fall, that average becomes support. But I talk about all this in my charting course and I teach in it a lot. Now, a couple of things. In my charting course, for my subscribers, paid subscribers, the course is normally $179.95. Right now, $99.95. If you're in this, you'll see the code word and just apply it and we'll make sure that works for you. Now, as I told you, I keep adding to my ETF video in the afternoon. And what do I do there? Well, I'm trying to give you ideas. Right now I've got 35 charts. I know the 36th is BETZ, but I need more trading days in it because I think that type of betting is something that people do. How I start off each video, I'm going to give you a touch of the fundamentals. So my subscribers already know what the market is looking for tomorrow in the way of economic reports coming out. They know the estimates, what time the reports come out, and where they're looking. Then what I do is I start talking to them about what happened during the day and start reviewing with them all these charts for trades in the morning on the 35. And there's a lot more than you're seeing here, obviously. I'm going to give them points of entry, exit, where I'm wrong on an idea, where I'm right on an idea. And folks, I am going to be wrong. But the idea there is to give you money management tools with everything else. I'm also going to be right. And as you take a look, I'm going to cover the spiders. I'm going to look at stock indices. I'm going to look at the metals, the other markets. You can see the symbols I'm covering, interest rates, the currencies, a lot in the energy because there's so much to do there. And it's a pretty exciting time to do all this. So I'm giving you a whole array of things that you look at. You know these are all on financial TV all day. So I'm giving you my wrap up each and every day so you can easily start working with them. So how do you find out what this all does and how you get to it? You go to our website at www.iraepstein.com. On the website, you're going to go to the word research at the very top of it. At that keyword, it's really simple. You're going to see SPDR ETFs. It explains how this all works. Yeah, I charge for it $8.95 for 30 days. That means you get 20 to 22 business days of videos from me. Ask my subscribers at some point, do I deliver? I think you're going to find out. I deliver. Even when I go away, I typically am recording for my subscribers. So most of the year they're getting what they need. It would take something to knock me down. You notice on, by the way, Saturday, I couldn't put out my videos on Friday. I couldn't stand. I put them out Saturday morning for you. I hurt my leg real bad. Still black and blue like mad. But in any case, don't know what I did to it. Just go to the website. We'll take care of it from there. I'm Ira Epstein. You have a good day.